The dreaded tax season is upon us, and there are major changes that you need to know about in store for millions of small business owners. Some of the changes that really are going to hurt you. A bunch of popular business deductions that used to lower your tax bill have either been eliminated or significantly reduced altogether. An expert is with me to break it down for you. Dan Geltrude is a CPA and the author of Positive Financial Karma, something we all hope for. Love the cover, by the way, Dan.
Thanks,
So
Susan.
let's start with these disappearing deductions related to entertainment. Let's just say, hypothetically, you're taking a client out for dinner, maybe a baseball game. Can you still write that off?
Well, the only piece that you can write off is the actual food. I like to call this loss of deduction food but no fun. So if you're out to a ball game, as the example you use, you are permitted, if you get a hot dog and some popcorn and peanuts, that piece you can write off. However, the tickets for the actual game itself, that is no longer deductible. And that, quite frankly, really puts a cramp on some of the small businesses that really rely on entertainment in order to push their sales forward. So some people are going to be surprised when they lose that deduction.
And speaking of small businesses, a whole lot of them, as you know, borrow money to get off the ground. They use that money to buy the things that they need to survive. Can they deduct the interest still?
Well, yes, they can deduct the interest, but if you are a company that has more than $25 million in sales, you're going to be limited as to how much loan interest for things like a line of credit that you're permitted to deduct. And that number is going to be limited to 30% of your adjusted taxable income. Now, there are some exceptions to that. But again, those businesses that are really relying on borrowing money where they need that working capital, they potentially are going to feel some pinch there, Susan.
And I'm sure you get a lot of questions from friends and family. I know if you have a doctor in the family or an attorney, there's questions coming left and right. Are people asking you why are these deductions disappearing and why are they?
The reason the deductions are disappearing are, quite frankly, because you had a situation where you're trying to fit into a box within what the tax code's going to allow because of budgetary reasons and Senate rules. If you're going to give some in certain areas, like for small businesses, they instituted the qualified business income deduction, which is a great deduction for small businesses because you get 20%. And there's a calculation that goes along with that, but you get a 20% deduction. However, there's a bit of a take back or a pullback in certain other areas. So like everything else related to the Internal Revenue Code, there will be winners and there will be losers. And people are going to find out which side they fell on in the not too distant future.
Yeah, again, your book is called Positive Financial Karma, and plan ahead, I would say, to not be so stressed at the last minute. Dan Geltrude, thank you.
Thank you, Susan.